let's quickly talk about corporations. Because corporations as well as S corporations is more flexible than what we mentioned before. It's definitely more powerful than the sole proprietorship, but also more powerful than the single member LLC as well as the limited liability companies. Okay? And as I said, we're going to discuss this on the two theses. The one is owner's liability, the other is taxation. But I want to talk about flexibility first. Because corporations got so much more flexibility that it has its own disadvantage. Okay? It's not just about advantage, but also disadvantage. I want to talk about the very big and a lot of people complain about disadvantage first, and then we will talk about all these great benefits later. Okay? You have to know if you just talk directly, you want just get the money earned from corporation into your own pockets, and if you go through the dividends, there is a very serious issue of a corporation called double taxation. Okay? So basically, corporation is just like a person, right? And that person earn money will be taxed at the corporate level. And then, if that person like earn some money and they want to distribute the money to you, right? Say, hey, this is the money that left, right? When they satisfy all these everyday operations and they still got money left, they want to return that money to you, the shareholder, right? And then, in the form of dividends, you're going to be taxed at your individual level. That's the very, very typical disadvantage. It's called double taxation because you're going to tax twice and it hurts. Okay? But as I said, the flexibility increased because there are more financial tools as well as taxation tools that you can use in corporation that you can do so much more without using dividend. But there are also a lot of regulations about that. Okay? Remember, what I'm talking is the corporation, okay? What about I want some corporation that can enjoy some of the benefits, but also I don't want get, that hurting, double taxation hurting so much, right? I don't want that double taxation. You can also choose another form of corporation called S corporation. Okay, so basically, S corporation is kind of special corporation that sort of enjoy the good stuff of the corporation, but avoid double taxation I just described. Okay, because S corporation does not tax on the corporation level, and the income is taxed to the shareholder were earned by the S corporation. So S corporation is like doing business or earn money, and when it earn money, it's taxed to the shareholder. Okay, and S corporations, it's a very, very popular form of corporation, and right now I think right now it's like one half of all corporations is like S corporations. But you know what? We will talk about this tiny little bit detail and advantage and disadvantage later. Right now, I want still stick to the two facets of corporation. One is the owner's liability, the other is taxation. Okay? In terms of owner's liabilities, corporation got the limited owner's liabilities. And I personally think that corporation is a little bit safer than, say, single member LLC, and definitely much safer than sole proprietorship. Okay? For a personal point of view, it's kind of like you can sort of compare owning a share of a corporation as if you buy some stock. Okay? You own a share of that corporation, but you only sort of own that company that much, right? Because you invest that, the worst thing to happen is that you lose all the money that you invested. Okay? So that's the reason I said this owner's liability is limited, because you're only liable to that amount of money, right? You'll not have unlimited liability like sole proprietorship. So, for example, some project you lose, the credit can go after your house, your assets, your money in your bank. Okay? So, corporation is like you lose money, right? That's the money. That's the limited money that you can lose. And this is one facet. The other facet is taxation point of view. Corporation is notorious, as I said, famous for double taxation. So that means you're going to be taxed at the corporate level. Okay? That's one taxation. Taxation at the corporate level. And then when they distribute in the form of dividends, remember, this is very, very important, because you want to avoid that, there is methods. Okay? But if you have to choose to get the money, to distribute money through the dividends, that's another taxation. So taxation 1 as well as taxation 2. Okay, so 2 taxation, double taxation. Okay, corporations. But as corporation, if you compare this, the single member LLC as well LLC, you can sort of compare these two as well. So single member LLC, S Corp, and corporations. S Corp is limited, of course, because come on, it's a corporation. Limited, right? Limited, owner's liabilities, but it's not taxed, so that's brilliant. It's just got one tax, right? Taxation 1. Taxation do not happen at the corporate level, but rather it's kind of like a single member LLC, right? It's kind of like a flow through taxation on a per day and per share basis. So because you know what, since it's a corporation, why is it like a per day? Because the transfer do happens, right? So we'll talk about all the tiny little bit of detail later, but just right now, just remember this: as corp, you're owning that as if you're owning part of yourself, right? And if you do something, you will get taxed. The S corp is like extension of you doing things in the form of corporation, but still you're gonna tax onto you. Okay, so that's the little bit of difference of a corporation and S corporation. And S corporation, and if you look at the data right now, it's like it's very hot in take a huge percent of all the corporations in America. Okay, that's 2 corporations.